Know the difference? Team Tech Trust, a financial planning segment. Ron Johnson, Senior Financial Planner, CFP at Annex Wealth Management. Hello, Ron.
Hey, Danny.
So let's see, your kids are probably stuck at home. Are you the superintendent of the homeschool system?
Oh, my wife has stepped up, and she is working from home, as I am not.
Well, these are crazy times. Having a solid financial plan from a fee-only fiduciary from Annex Wealth Management can remove some of that worry when we see down markets like we're experiencing now. So, Ron, let's talk about strategies that we might be talking with our clients about during extreme downswings in the market.
One of the things that we think about is tax. So let's take a look at your retirement assets. What can we do with this market to take advantage and put you a step farther ahead towards retirement? Okay, one of the things we can do in a down market like this is take your IRA and convert it to a Roth. And that overall can make your retirement plan much more tax efficient during the long run.
So Roth conversion, are you selling?
No, if you're looking at a Roth conversion, all you're doing is moving an asset from one tax shelter to another, right? You're moving it from a traditional IRA and you're putting it into a Roth IRA.
So you're talking about paying taxes now in favor of tax-free growth later, and that is a good planning strategy for taxes. But does market performance influence this? Because we're seeing what the market's doing.
Really what you're doing, Danny, is by converting retirement assets to a Roth when the market is down, you're going to pay less tax. I think it might make more sense if we put some round numbers to this. So let's use a very simple example. Let's assume that you've got one share of XYZ mutual fund in your IRA, and let's assume that share was worth $10,000 at the beginning of the year. If you were to convert that asset at the beginning of the year, you'd owe tax on $10,000. But now, with the market down significantly, let's say that same share is worth $7,000. Okay, if you were to convert that today, now you only owe tax on $7,000. That's $3,000 of income you're not paying tax on.
Bingo.
Yeah, that's a lot less tax, right? So what does this mean going forward? Well, let's assume that the market rebounds, and we're quite certain that it's going to. If you move that asset to Roth now, say it's worth $7,000, and a year from now, the market bounces back and it grows to $11,000, that's $4,000, Danny, of tax-free growth you just experienced.
Bingo, bingo.
Yes, sir.
Right. Who's this best suited for?
Optimally, what we're looking at here is we try and do a conversion in years where your income is lower, okay? What we're trying to do is realize income throughout your lifespan in years when income's down. So that's the optimal strategy. Now, that's not to say it wouldn't make sense for you because the market right now is down significantly now, Danny, right? Just like anything in financial planning, you don't take a look at just the one tactic. We want to make sure that everything in your financial plan is working together, and this is just one component of it. So yes, it makes sense for some people. No, it may not make sense for others.
But this has triggered a tax event, so how does somebody pay those taxes?
Yeah, that's a good question. Optimally, what we're looking for here is that you take, in our example, you take that $7,000 and you move it directly to a Roth. You don't withhold from that source. Optimally, what you want to do is you want to take and pay those taxes out of pocket. What does that really do? You've actually increased savings for the year, right? Because look at it this way. What if we withheld 30% tax on that $7,000? Now, instead of moving $7,000 over, maybe you moved over $5,000. But if you pay those taxes out of pocket, we move the entire $7,000 over. That's really a $2,000 increase in savings for the year into a tax-free vehicle. Pretty nice.
Ladies and gentlemen, this is the way our financial planning team thinks and works. Let's talk a little bit about that free portfolio review from Annex. Somebody clicks the Get Started button on annexwealth.com, and then we've got somebody's current portfolio information. Talk a little bit about that process when it comes in.
When someone comes in and they're interested in working with Annex, what we want to do is take a look at their assets, take a look at what they currently have, and we'll offer suggestions of what we would do, what our strategy would be when they become clients. Once they become clients, that's when we'll help them implement a very specific strategy for them. Think of it this way. Come on in. We'll talk to you about high level what we can do for you and how we can make an impact. Once you become a client, we'll get in the weeds and get it done for you.
Don't let your financial plan languish. And if you don't have one, let us know how we can help. Head to annexwealth.com and click that Get Started button. Ron Johnson, Senior Financial Planner and a CFP at Annex Wealth Management. Thank you, Ron.
Thanks, Danny. Appreciate it.